Is lesson 2, where I'll be going through liquidity within the markets. Let's get straight into it. So, what is liquidity and how do we identify them? So, in simple terms, liquidity is just an area where there's stop losses and pending orders within the markets. Essentially, we are the liquidity in the market. However, that does not necessarily mean all orders must be taken out by smart money, as some areas of liquidity are simply not liquidated enough for it to be worth the grab. Popular areas where retail traders would usually execute a position are areas such as equal highs, equal lows, which is examples of that would be support and resistance levels, double tops, double bottoms. Another popular area would be trend lines, and another popular area would be golden zones. All of these three areas are strategies where a typical retail trader would usually execute a position on. Now, what does that mean? That means there are a lot of stop losses at these areas, right? Which, in a smart money's point of view, that is all liquidity that they can capitalize on, right? Now, these areas would most likely have multiple. Again, this is repeating the same thing that I just said. So now these areas would most likely have multiple orders, as many retail traders are taught to buy or sell of these areas. Knowing this, smart money would aim for these areas as multiple stop losses would be set there, which makes it worth the grab. Identify as liquidity within the market. Now, if I go back to the last slide, remember when I was talking about the popular areas where retail traders would usually execute their positions of? Those are areas of what we deem as liquidity in the market. So we have our equal highs, our areas of double tops and resistance. When we identify these levels, we would mark that out as an area of liquidity. Same thing for equal lows. When we identify double bottoms or areas of support, we'll identify that as liquidity. Same thing for a bear trend. In a retail's perspective, when they identify a trend like this, they'll usually wait for the pullback to touch that trend line so they can sell off again. Same thing for a bear trend. In a retail's perspective, they'll draw out their trend line, wait for the price to pull back to that trend line so that they can buy up again. Fib levels. Once a retail trader gets that impulsive move, they'll fib up the swing high and the swing low, wait for the pullback to the 618 level to then sell off again, and saving for a bullish market. So as we can see here, we can identify this very nice support level, right? In a retail's point of view, as soon as price pulls back to this double top, right, they'll usually sell off. Now that they've sold off at this point over here, they'll set their stop loss above a few pips above this level. So now the market moved in their direction. They're happy. Oh, I'm the best trader in the world. Sniper entry. All of that nonsense. Price starts moving in their direction, and then boom, their stop losses have now been taken out. They've been liquidated. Another example of equal lows being taken out. All of this support level, right? A retail trader would have bought at this point over here. Would have bought right over here. Stop loss a few pips below. Price starts moving in their direction, comes back to break even. They'll buy again, add more liquidating this area more, and then boom, the market makers move price even lower to seek all of this liquidity that's been created. Now retail traders have completely been wiped out. Now here we have a bullish trend, right? So no, if I go back to the first lesson when I was teaching a lot of market structure, without knowing what liquidity is, you could have caught this trade, right? Because look, we have a series of higher highs being created and a series of higher lows being created. What did price do over here? It broke that low. Now once we get that break of structure, what do? We start to look for sell positions, because now we can see that the sellers are coming into the market. Price reverses, mitigates, and we sell off. Okay, but anyways, let's go back to the liquidity. So once we identified all of this trend line being created, right? That is all liquidity in the market, because in a retail trader's perspective, they'll wait for that pullback to buy off the trend line again, right? And then boom, what happened? Liquidity was taken out, structure was broken, price pulls back, mitigates this area of supply, and then continues price over to the downside. This is another example. Price was printing a series of lower highs and lower lows. Now again, without the liquidity concept that I'm teaching you now, you lot could have taken this trade right over here. How? Because look what happened over here. Price was creating a series of lower highs, right? And then boom, we had that break of structure. Once we got that break of structure, what do we know? The buyers are coming into power. Now we're going to have a shift in a market. The market's going to shift into the upside. Price break structure, pulls back, mitigates our order block, and moves over to the upside. But let's talk about liquidity now. So as you can see here, price is creating a very clean trend line, right? As a retail trader, what they'll usually do is wait for the pullback to that trend line and sell off again. And then boom, what happened? The trend line got liquidated. Stop losses have now been taken out. Okay. Fib levels. So as we can see here, price created an impulsive move, right? Now, as a retail trader, when there's an impulsive move like this, you'll usually fib up the swing low to the swing high and look to buy off the 618 level. Now, look at the 618 level and let's see what happens now. Boom. So, our 618 level was somewhere over here. As you can see, it sort of moved over in their direction and then it took them out fully. And it came to our discounted areas, our 79%, our 79% discounted level, which also aligns perfectly with our demand zone, or you can call our bullish order block, or you can call the sell to buy, right, charts. So as we can see here, GU, right? What did GU create right over here? A double top, correct? An equal high. Now when we identify an equal high, what do we know that is? An area of liquidity, right? So in a retail trader's perspective, they would have sold off over here, had their stop losses a few pips above, right? Now, once price starts moving in their direction, they're excited. Oh, look at me, best trader in the world, right? And what ended up happening? Price came to our area of demand right over here. Okay, as a smart money trader, I would have bought at this point over here, which I did. And if you go back to I have a GU market breakdown on my IGTV. You can go check that out, right? So once I identified that area of liquidity, I knew price was going to pull back into my demand, and I'm going to buy to seek that liquidity area of liquidity. Now, what happened, right? These were equal highs. What happened? Price moves in the retail trader's direction, gets them excited, and then boom, takes them out. Right over here, what happened? Now, let me go over to that 4 hour to make it clearer for you guys. All right, let me zoom in. Okay, so the same thing happened again. Now, once we got that break of structure and price took out that liquidity, price starts to pull back, right? Now, what did it create? First of all, let me show you. Take out my fib level, mark out the low, mark out the high of this swing low and this swing high. Okay, cool. So this area over here is the 618, right? Then let me just take out the 618 fib if I have it. I don't even have it. Okay, cool. But let's just say the 62% is it almost aligns with the 61.8, right? So this area over here is the 61.8. So as a retail trader, they would have looked to buy at this point over here. And also, what can we identify? Look at all of this equal lows, right? The wicks all aligns together. What's that creating? An area of support, right? So not only are they buying off a support level, they're also buying off a 618 level, creating even more liquidity, because as a retail trader, that builds more confluences to look for buy setups, right? So they would have bought at this point over here. Price moves in their direction, they're happy, they're excited, and then what happens? Boom, price liquidates them, right? They take out all the stop losses. And before it took them out, right, what did it create right over here? Now, I didn't mark that out, but we can mark it out together now. What is this? A double top, right? Look how market makers is creating all of this liquidity, right? They're creating all of this liquidity so that when they're moving in the intended direction, they can liquidate in all of this move. So this is liquidity right here. Price pulls back, comes into our 4 hour area of demand, then starts to move over. First, it takes out the liquidity, right? This liquidity is now taken out. And now what does it create? Again, you see the cycle. It keeps leaving liquidity. It keeps creating these equal highs that it then seeks to take out, right? So this double top is now taken out. And what did price do again? It created another double top. What is this? More liquidity. Retail traders would have looked to sell off at this point. Stop losses above. Price pulls back, comes into our discounted. I'll show you now. Demand. This is swing low. This is swing high. Look, it came into our discounted demand, right? So price created a double top, pulls back. Retail traders are happy because they're in profit. And then boom, liquidity is now taken out, right? The examples keep repeating themselves. Now this liquidity is taken out, price break structure. And what does it do again? it creates all of this liquidity. This is a nice clean resistance level, right? The retail traders will look to sell off, sell off, sell off. All of these touches that keeps touching is liquidating this area more, right? So now that this liquidity is, this resistance is now formed, retail traders are selling, they're happy, they're in profit now, right? This area of support is created. The area of support is now taken out, it's liquidated. Retail traders are still in sales at this point over here. Price comes into our 4-hour sell to buy candle, our order block. And what does it do? Boom, takes out all of the stop losses that was set over here. Retail traders are now out, and our smart money traders are in at this point over here. And it goes on and on. The examples. Let me show you. Let me see if I can find more examples on any bear. E.g., current. Right over here. Right. So let me go into the lower time frame to make it clearer. Sweet. Now, when I took this sell off from here, right? Now, let me just replay price for you guys. All right, there we go. So, why did I take this trade? First of all, we got that break of structure, right? It broke structure. Price was creating higher lows, and then boom, we got that break of structure at this point over here, right? That was my first confidence. Confidence number two, what can we identify at this level over here? Let's remove that. Look at all of this. This is a very clean double bottom, yeah? An area of resistance. Now, what is that? Liquidity, yeah? What's this over here? A double bottom, even more. Liquidity. Oh, let me go back. Let me just remove that. Hey, oh, forget that. Let's keep that X there. Yeah. So not only do we have this double bottom over here, we also have this double bottom over there. And what's that? More liquidity that needs to be taken out. Yeah. So once price pulled back to my order block after I got that break of structure and identified these areas of liquidity, I knew for a fact that EG was gonna drop and seek this liquidity, right? And let's see what happens. Liquidity number one, taken out. Let's wait for it. Boom. And you see this area of liquidity that we had marked out? Price took out our first area of liquidity, and now it's taken out this second area of liquidity. Now, once it took out that area of liquidity, look, watch this, guys, yeah? This is current market conditions, right? I have this area marked out. It's a very nice supply zone, which also aligns perfectly with my discounted area, the 79%, right? So I'll be looking to sell off of this area over here. First of all, my first confluence is that it broke structure, right? So continuation in trend. Two, we have a discounted demand over here. Three, look what it left down here. Liquidity. Yeah? Notice how market makers will always create these areas so that they can capitalize on these areas, right? So as a retail trader, they would have bought of this little double bottom. But what's going to happen? Price is going to, they're happy, they're in profit, whatever. Price comes into our area of supply, and then boom, we'll seek to take out that area of liquidity. So I hope it's all making sense to you guys and it's all coming together.